Good morning. Excellencies, honored guests, colleagues, ladies and gentlemen. My name is Ian Nathan. I lead the gas and LNG practice area in the Research and Advisory Group in Energy Intelligence. It is a privilege to be with you once again, and I want to welcome you to the 40th Annual Oil and Money Conference, and thank you for your participation. My goal this morning is essentially to set the stage for today's terrific program. In our keynotes and executive forums, for example, we are once again fortunate to have several CEOs who will share with you their visions and expectations for the gas and LNG trade. They will illuminate their company strategies, provide important clarity on the myriad opportunities and challenges that await stakeholders. For our panel sessions, we have an outstanding lineup of speakers who are really serving on the front lines of strategy, project execution, finance, shipping, and trading. And they will help us examine the key issues driving this industry's evolution. So, our reporting and research, along with interactions with industry leaders, really indicate a strong sense of long-term optimism for gas. And that's despite any short-term challenges in the market. But I think it's also important to note that we see several underappreciated risks that could keep gas from reaching its full potential. And this has implications for the shape of gas's role in the energy transition, and could be the difference between gas as a destination fuel or only a bridge solution. So several themes that really illustrate this optimism stand out in our observations and conversations within the industry. First, there is consensus on robust long-term gas and LNG demand. Well, demand growth, that is. Indeed, our own forecast calls for 4% annual growth to 2030, driven by China, India, Thailand, Pakistan, and Bangladesh. For Thailand and South Asia specifically, this is due to their need to meet growing requirements for electricity and strategic industries, built, I should say, on now stagnating and declining domestic gas supplies, a factor I did highlight on this stage last year, and it's an important part of our analysis. There is a graph, there should be a graph, that graph, of our long-term demand outlook illuminates just how important the South Asia piece is to our forecast. Now, this leads us really to the second piece, and that is renewed optimism about LNG supply growth. Now, this is due in part to a growing perception of lower barriers to project advancement. It's helped by portfolio players, self-financing, equity offtake, and other drivers, and demonstrated by a parade of FIDs this year. And it really represents, quite a turnaround from the industry's outlook in previous years. And I can remember it wasn't that long ago when we were really talking about, the lack of FIDs. Well, this year has really been quite something in that regard. But importantly, this conversation also includes potential for U.S. ventures that are working very hard to navigate commercial challenges in an increasingly competitive market. And our outlook does include several U.S. ventures. The third thing is confidence about growing LNG liquidity and commoditization. And as demand grows and flexible supply grows, there is a feeling in the industry that commoditization and the wide adaptation of a benchmark are inevitable. And we see new flexible supply as really the key catalyst. By and large, this positive outlook is not all that surprising for an industry with a lot of gas to sell in a world with compelling reasons to use more of it. But that said, our work includes looking at several risks that do need to be considered. as we look at the future. So on the demand side, for example, we recognize that affordability challenges in growth markets and efforts to diversify electricity generation impact long-term LNG requirements. Furthermore, alternative gas supply, potentially from upstream revival, could weigh on LNG requirements as well. Furthermore, close to 20 additional countries are really seeking to initiate LNG imports over the next few years. This fundamentally changes the nature of the market, which is becoming more fractured, but also providing new opportunities for nimble sellers. And then there are market access challenges that really stick with us in our analysis. There are political, regulatory, commercial, logistical, and other types of hurdles that could slow the pace of new market development. And while there are various drivers from seasonal and peaking requirements to oil displacement, hydroelectric backup, and pure energy security concerns can impact that overall demand outlook or that overall contribution to demand. So with that in mind, our Gas Buyers Forum, which is coming up next, will tackle these issues in greater detail. But also, it's important to keep in mind that gas's role in power generation is arguably at the center of the energy transition question. In this context, our gas and renewables session, coming up a little bit later, will ask whether gas is on the wane. Now, gas's success, which has been validated by an almost 3% annual growth over the last 50 years or so, is largely attributable to its use in pushing oil out of peak shaving and power generation. But further penetration as a baseload fuel, particularly for countries that need to import LNG for this purpose, is not an obvious choice. And that's due to given legacy coal use and increasingly competitive renewables, solar and wind power in particular. So the question is, will gas be relegated to backing up solar and wind? Or does gas have a different destiny in the generation stack? On the supply side, our LNG Developers Forum, which I will have the privilege of moderating a little bit later, will evaluate what projects need to do in order to advance. Now, we see more than 80 million tons a year receiving the green light within the next 6 months or so, give or take, including Rovuma. And following the last 80 million tons, which have been sanctioned over the last 12 months, leading to really a well-supplied market into the middle of next decade and beyond. And that is with our 4% annual demand growth outlook to 2030. But what about the more than 150 million tons per annum of capacity that is working very hard to reach FID by 2021? And even more capacity beyond that. And the next graph, which should be appearing shortly, it shows how well supplied the market will be with just what's operating and what's under construction. And that's to say nothing of what's in development. So really, it's an increasingly competitive environment, and we'll examine the kinds of project innovations that are really needed to advance in these conditions. So while companies are evaluating project opportunities, advocacy for gas as a solution has been important with strategies to match that include market creation and protection through downstream value chain integration. And it includes low-carbon electricity value chain strategies. But it is also becoming evident that aside from this keen attention to environmental impact, project promoters need to ensure that their activities result in minimal climate impact as well. In the US, perhaps, liquefaction provides a solution to monetizing gas that would otherwise be flared. But is that enough? Is it enough to simply promote gas as a solution? Or has that ship sailed? Now, this could turn out to be one of the industry's biggest challenges yet, and will be contemplated a little bit later today in our new Energy Solutions panel this afternoon. So taking all of this into consideration, that's growing gas abundance and a rapidly growing, evolving LNG trade, this afternoon we'll consider whether we actually have a global gas market, a true global gas market. And while we see this market heading in that direction, we also believe that an avalanche of new, uncommitted, uncontracted volumes will be a stronger catalyst for commoditization than just simply existing supply turnover. But whether we answer yes or no to this global gas market question, the key is really what liquidity means for LNG demand prospects, project development, and financing. So we ask ourselves, will LNG commoditization support baseload use, or will it be too late for LNG by the time a truly liquid market takes hold? What are the implications? Why does this matter? You know, abundant gas supply and solid rationale for using more of it are critical, but not sufficient conditions for ensuring its long-term role globally. The demand side also requires a mix of supportive policy initiatives, but government priorities remain divergent and mixed. On the supply side, low costs and favorable project economics are critical factors, but not the only factors driving advancement, which is something that we've been highlighting for quite some time. And the climate impact under the umbrella of social license to operate is becoming even more critical for project promoters. Ultimately, all stakeholders have a role to play in ensuring that what could be a long-term fuel solution does not flame out before its time. So with that, I encourage you to discuss and debate these issues with my colleagues and me, and with each other over the course of the week. And I want to thank you for your attention and wish you an interesting, productive, and enjoyable conference. Thank you very much.